Hey guys, and welcome back to my channel. I'm so sorry today I'm a little sick. It definitely rains when it pours, doesn't it? Anyway, today we're going to talk about a warning signal you will not see in any media headlines. And for a reason. You know, the media does not share with us what is really going on. That's why Trump, love him or hate him, has been really cracking down on the media to make sure that it's truly fair and democratized, but enough about him. Anyway, this signal that we're going to talk about today is quiet, but super powerful. Something is shifting behind the scenes and very, very fast. It's the kind of shift that only becomes obvious once it's like slapped you in the face, okay? So don't fade today's video or this warning I'm coming to you with. We see capital moving, institutions aligning, and pressure building at the highest levels. The pieces are already in motion too. And what I'm about to show you and break down in today's video is going to show you why. So stay with me, guys. And without further ado, let's get into it. So the first clue was in the Nasdaq. This month, the index hit a new all-time high of 21,798 points, carried by AI and tech. This breakout is the first domino in the domino reaction. Every time equities flip risk on, as we're seeing right now, crypto follows, amplified, accelerated it, and often completely missed until it's already flying. Okay, so I don't want you guys to be the ones that miss this breakout. So thank you for tuning in again today. I know I was gone for a week, but I'm completely back on, even if sick. As I am today. Anyway, the price action is only the start because behind all of this, okay, behind the scenes, the Nasdaq exchange itself made a $50 million equity investment in the crypto exchange Gemini. So think about that. Wall Street's flagship exchange is buying into the plumbing of crypto, the infrastructure. So this is a signal. Now, if we layer this in, over $7.4 trillion is sitting in US money market funds right now, a record high. That's trillions of dollars in dry powder capital earning 5% yield. But if risk markets break out, as they already are, some of that cash won't sit still. It rotates, it moves, it hunts momentum, the next best opportunity. And this cycle, a growing portion of it, is landing in crypto, but not the way most people expect. Because this time, the liquidity isn't just buying spot Bitcoin on Coinbase. It's migrating on chain, tokenized assets, US treasuries, real world yield, and synthetic dollars just hit a new all-time high of nearly $290 billion in assets under management. Ethereum absorbed $17.2 billion in net growth just last month alone, driven by players like Athena, Circle, and Tether. This is the birth of a parallel financial system, and Ethereum is becoming its backbone. But Ethereum isn't the only one absorbing this rotation. While the headlines stayed quiet, Solana's DeFi ecosystem quietly 3x'd in the last year, up from $5 billion to over $14.6 billion in total value locked. And just in the last 90 days, Solana has pulled in over $1.3 billion in cross-chain inflows, more than any other chain. Macro investor Raoul Paul posted the total 3 chart. That's the total crypto market cap, except Bitcoin and Ethereum. And it's coiled at resistance. And historically, this is the moment before a breakout. Bitcoin leads the way, Ethereum follows, and then liquidity floods into the rest of the crypto economy. That's the stage we're entering into right now. But the most important signal of all is coming in from the old world, as we call it. Gold just shattered its inflation-adjusted 1980s high, a level that has held for 45 years. It's now just pushing into new all-time highs. It's up over 40% year to date. Gold miners are up nearly 100%, 10x the return of the S&P 500. And when that happens, it's not about commodity cycles. It's a stress signal. It speaks to us the fundamental change happening in the economy and in the world. And it's a historic one. And now we know why. Last week, U.S. Treasury Secretary Scott Bessent revealed something staggering. The Labor Department overstated job growth by 1.5 million workers. That's the largest jobs data revision in American history, even worse than that we saw in 2009. And here's what that means. Entire industries, leisure, hospitality, transportation, were showing phantom jobs, inaccurate jobs representation. And when you strip out healthcare, the US has actually lost over 140,000 jobs in the past 4 months. Chamath Palihapitiya called it out directly. The Fed is woefully ill-equipped, he said, and is flying blind with broken data. Trump went even further, calling Jerome Powell a total disaster, of course, in his language as he speaks, but sometimes that's just the truth, and demanding immediate, massive rate cuts. Even Scott Bessent followed up saying, if the Fed is truly data dependent and the data is wrong, then makeup cuts are needed. And markets are front running the response. One analyst posts that a 50 basis point cut with dovish guidance, meaning positive guidance, is now his base case for the Fed's next meeting. That would be the first time in over 30 years that the Fed cuts rates with stocks at all-time highs, inflation running above 3%, and GDP near 3% as well. Gold traders already sniffed this out months ago, and Bitcoin has historically lagged gold, has followed gold by about 200 days. But if this lag closes the way it did in previous cycles, Bitcoin is targeting at least 185,000 and fast. Now, here's the wildest part, okay? While the Fed is cornered, Congress just introduced a bill to study a strategic Bitcoin reserve. That's right. US lawmakers are considering Bitcoin as part of national reserves alongside oil and gold. And at the same time, the CFTC is moving to make it easier for Americans to access global crypto exchanges by clarifying Foreign Board of Trade's rules to allow US traders deeper access to crypto derivatives and liquidity. And in the Senate, 12 Democrats just unveiled a new market structure framework for crypto. This is no longer a fringe asset, okay? It's being normalized on both sides of the aisle. And while governments study it, corporations, are already acting because they understand money trends, they know how to interpret the economy, and they don't have as much red tape as governments do. So hopefully now that Trump has surrounded himself with a really strong cabinet across economy and every department and sector, essentially, hopefully things move along faster. Anyway, strategy, formerly known as MicroStrategy, you of course know this, continues to stack more too. But ETH's largest digital asset treasury, BitMine, may have just pulled off one of the wildest plays of the year, turning a $20 million investment into a world coin digital asset treasury into 1.1 billion, a 55x return. That's what they did. Public companies are now using asymmetric crypto plays, to multiply their capital before any nation state has even moved. This is the Treasury playbook of the news cycle. And now one last piece is falling into place. That said, we do have one short-term risk window. Tomorrow brings the next CPI data update print. And the last 3 CPI days led to 9 to 11% drawdowns in Bitcoin. That's the short-term shakeout window. I already went into this in, I would say, more or less grand detail in my yesterday's video, which I would encourage you to watch out because this is just normal. No one should be scared here. But here is what has changed, The PPI data just came in way below expectations. Negative 0.1% month over month, 2.6% year over year versus the 0.3% and 3.3% expected. This means inflation is cooling. And if the CPI data confirms it, the Fed has every excuse to cut. And when that happens, trillions of dollars in money markets can rotate with force. So as we wrap up today's video, I just want to emphasize and have to emphasize that this rotation has already begun, guys. It's quiet, it's deliberate, and it's deep. Right now, we see capital, the narrative in the market, credibility, all snapping into alignment, all of it lining up at once. This is the kind of setup that can trigger crypto's biggest pump ever, okay? Just crazy domino effect. Pump up. And if you're here right now, you're early and you're at the right place, because it's my commitment to you to keep you updated and help interpret what's going on in politics and the Fed and their complicated updates that nobody understands. And it's my goal to keep you informed so you know what's going on and you know to not freak out, and you even know when to start selling a little bit, because I will be letting you know in my channel what I'm doing and what my research team, that's amazing, and what their research tells us is happening and what we should be doing next. Though this is not financial advice, you should always verify and back up your own decisions, okay? But I'm here to help. So let's not wait for the headlines to catch up, because once you see it in the headlines, it's too late. You missed the boat, okay? And once it all starts playing out as it is right now, it's not gonna take years. It's gonna take weeks. Anyway, guys, that's a wrap for today's video. I'm gonna go make myself some ginger tea and hopefully feel better here very soon. I love you guys very much. Take care, and I'll see you guys in my video tomorrow. Ciao.